prices are swinging between geopolitics and fundamentals.
Crude briefly surged to multi-month highs on fears of possible U.S. strikes on Iran before retreating as concerns over a global supply glut resurfaced. With forecasters warning of surplus barrels, the oil market is being pulled in opposite directions, leaving prices volatile and the outlook uncertain. Now here's our next report that explains more. Take a look.
Crude oil prices are retreating after briefly surging to multi-month highs, driven by fears of potential U.S. strikes on Iran. Brent and WTI rose sharply on geopolitical risk before pulling back as market attention returned to fundamentals. Most forecasters agree the global oil market is oversupplied. Goldman Sachs now expects a 2.3 million barrels per day surplus in 2026, revising its price outlook lower after crude lost nearly 20% last year. Rising inventories and slowing demand growth suggest prices may need to fall further to rebalance the market unless major supply disruptions intervene. The supply picture remains mixed. The United States has begun selling Venezuelan crude, with the first cargo worth $500 million adding to bearish pressure. At the same time, sanctions and security risks continue to distort flows. Drone attacks in the Black Sea have disrupted exports. Kazakhstan reported a 35% drop in oil output in early January following strikes on key infrastructure. The European Union has also moved to tighten pressure in Moscow, planning to cut the Russian oil price cap to $44.1 per barrel from next month. These developments keep supply risks alive but have not yet outweighed surplus concerns. Despite geopolitical flashpoints, the oil market remains focused on excess supply. The U.S. Energy Information Administration and the IEA both forecast continued global production growth, even as OPEC pauses its output increases. U.S. shale producers warn they are uncomfortable with prices near $50 a barrel, and the EIA expects U.S. output to flatten and edge lower through 2027. Still, traders are unconvinced. Floating storage reached 1.3 billion barrels in December, the highest since the pandemic, though much of it is sanctioned oil from Russia, Iran and Venezuela. With China's oil imports hitting record highs in 2025, the market remains caught between conflicting signals and potential disruptions. Business Bureau, WION World is One.